All right, guys. So we'll go through some websites which are useful, and then we'll go through options pricing, right? Or how I scale out options that are usually more than $2, like a $3 option or a $5 option, how to take profits on those options, right? Because many of you guys buy options at 5, they go to 7, you don't take profits, and the next thing you know, after 1 hour, they're trading at $3, right? So that's something that I'll go over. And then obviously I'm gonna go over some crypto leverage trading. Because some people I see they're using leverage on crypto, right? It's not something I need to do it, but I'll just go over on request, how the percentages works and how you get liquidated through those, right? So first, the first website that I have open right here is called Barchart.com. I came across this website when I was in university, like about 10 years ago, and it's one of the most useful websites, right? On Friday, or I believe Thursday, Sachs pointed out to when you look out for the stocks which are leading on the day for the most green and whatnot. So when you go on barchart.com, this is the first website that I have open. And there's a huge lead, and you can go, there are a lot of things. Like if you go through this website, it'll take you 2-3 hours. There's so much information on this website, anything that you basically need that's going on in the market, right? For example, if you need the dailies of performance leaders, for example, they're all right here. If you need the price surprises, by the dollar, whatever it may be. But here on the left, on the side, when you click on stocks, right, you can see a lot of different uh, topics here. For example, today's most price, the new highs and lows, right? The earnings within 7 days, the stocks that might have the earnings within the 7 days that you want to know, right? Everything is in here, all right? And if you need stocks, for example, if you need something on 52-week high, you can probably choose, where is it? It's here somewhere. But right, new highs and lows, and then you can here choose 52 weeks, 6 month, 3 month, 1 month. You can choose all these different things, right? The deeper you go into, the more information you get, right? Now if you're somebody that trades equities and you want to know that that's good to hear, Andrew. If you're somebody that trades equities and you want to know some charts with nice uptrends in this market, right? You want to figure out what stocks are going up in this market. This market may not be for you. You simply go on the 52-week highs. Let's look at this first chart, ADM, Archer Daniels Midland. I have no idea what this company is, but if I'm a technical trader just trying to make a trade, and I go on a 6-month chart, you can probably go better on TradingView, wherever. I'll just go here. This is a nice looking uptrend chart in this market right now. So you probably want to dig into a little bit what exactly they do, where this company is, and maybe play based on technicals, right? It just broke out a nice cup and a handle pattern on a 1-year chart if we look at it, right? And so that's one example. Then you can also go, if you're somebody that likes the bearish, right? You can go on the lows and just go on the 52-week low, maybe, right? Whatever it may be. So there are a lot of things you can do here. All right. So anything that the top 100 stocks, market performance, anything you want to do here for options, right? Spreads, anything that you want to do, straddle. I do a lot of strangles, condor strategies, optionable stock, anything that you want to know basically. But it requires a lot of work that you need to put in. All right. And if you trade futures, that's also here. So that's number one website, barchart.com, that you can have on your list, that you can make use of it every single day. All right, it's a very useful site, and there's a lot that you can do in this. If you're a volume trader, Bucky, if you're listening, you can simply click here, most active volume, right? Because it all comes in here. All right, so anything basically you guys want to know, there's a lot in here. I cannot go everything, but you guys can see.
Yeah, bro.
Then next we have Finviz.com. I personally like this website, right? If I want to know some upgrades, downgrades, I simply just type in, for example, Apple, I'll type in, right? Or Facebook, if I type in, they have earnings coming up, right? Also known as meta platforms these days. The first chart that comes on Finviz.com, they have their own indicators set in, right? It gives you a little view that you might not see. So here we can see on Facebook, automatically, they have the support lines drawn here. And then we have this channel, right? The ascending trend line to a downside, then we have a descending support trend line right here. And now here you can see that's putting a nice little bottoming pattern, right? And then you can also see clear support. That's number one for the charts. And then if you scroll down, you can see which index is part of the total market cap, income, right? You don't need these things, but if you need, dividend, Facebook does not pay any dividend, right? And in the last 5 years, how they have performed, whatever it may be. And then if you go down underneath, you can see all the upgrades, downgrades, anything that may have come in. All right. And then if you want to know some latest news involving Meta, anything that's tagged online by some websites, mainly Motley Fool, The Street, Yahoo Finance, IB, all these websites, Bloomberg, Zacks, they have their links right here. All right. for the latest news that you want to know. All right. So, and if I was to go in, for example, Google, right, Google's chart, they have given their own technicals. It just gives you a different perspective and a lot of information here. Another thing that this is very useful for is if you go click on the screener on Finviz. All right. Now, this is one of my favorite. That's actually what I use Finviz for. Let's say, for example, if you're a technical trader, right? This is just descriptive. You can see, if you want to know, search the biggest market caps, anything that you want to search. But let's go on technical, for example. If you're a technical trader and you're looking at certain kind of patterns, let's say you trade head and shoulders only. So you click on technicals here, right? Finviz.com screener, you click on technical, you click on the pattern, and you choose what kind of pattern you're looking for. Now, let's say if I'm looking for head and shoulders to the upside. So I would click on head and shoulders, right? And this gives me all these results with head and shoulders pattern, all right? For technical. And then you simply go here, AB, you click on it. Hold on, where is it? So all these charts that come with the head and shoulder patterns. All right. Now, if I want to look at, for example, something with double top, right? You simply click on it and all these stocks that come here, and you can see these through charts also. You can click on charts here, right? So I think they changed this a little bit. So here you can either have the overview, you can have all the tickers, or you can simply click on charts here. It gives you all the double top charts. All right. So here, ABTX, whatever the stock is, there's a double top form. ACT has a double top form, right? AEP, so all these different tickers that you'll find, and there will be many. All right. And along with this, you can also select many other things. Do you want to trade a big mega cap stock? So with this double top, let's say I don't want all the stocks. Let's say, for example, head and shoulders, but I want the minimum market cap to be 100 billion, right? So I'll go large, right? 10 to 20 billion, at least 200, or maybe I'll go 200 or more. I want only big companies. So there isn't any for 200 plus. So let's go to large, right? And then in here, you might be able to recognize some names because they're big, right? Like Fox, we know, right? Whatever it may be. And there are different things that you can choose, right? And let's say if I want to do a different channel, I want to do a wedge up maybe, right? Here, right? That's also a nice pattern that usually works out, right? As you can see, they're all breaking down from the wedge. And whatever pattern you guys choose, basically what I'm trying to say. So here, if you go through a screener, technical, you can choose. You can also put fundamentals and technicals together. So in technicals, I have a wedge up chosen, and in the fundamental, you can have certain things that you want, you can choose from here. All these different topics, all right? But that's something that you want to look through on your free time. But I gave you a little tip now. So if you go on finviz.com, go to the screener, and you can go through a lot of different the way you can choose certain things. So that's what I personally use Finviz for. All right. Then next I have Yahoo Finance. This I use for how do I move this? I need to click on this website. Okay, so I use Yahoo Finance. I basically use sometimes if I want to understand a certain name, right? If I want to understand a certain name, I want to know about the profile of the company. I want to read about what the company is, right? Or any, let's say for example, LRCX, and I have no idea what. Of course, I know what LRCX is, but I want to understand what's the difference between LRCX, AMD, Nvidia. They're all semiconductor companies. What exactly do they do? So I'll type in LRCX here, right? And then I'll click on profile. Once you click on profile, and you'll see, they belong in the tech sector. It's a semiconductor equipment and materials industry. It's located in the US. This description you can read. It provides you with a nice little short summary of the company, what exactly this company is. Because many times you play tickers, you don't know what those tickers are. Of course, you want to know what they do, right? So LRCI, it has a nice little, like Yahoo Finance, this is the only one thing I use for a company that I don't know. I simply just go read the nice little description they have. That's it. That's all I use Yahoo Finance for personally. But of course, they have other things, right? They have a little bit of technicals. I personally don't like it, right? I don't use it because, then they have some historical data, financial analysis, options change. They also have sometimes if I need to look at this, I cannot log into my platform. If the internet's not too strong, then yes, I do it. I'll use it for options just to see the pricing after hours, and then I'll summary of the company. So, and then they'll have some news and press releases here related to LRCX. All right, if you guys want to read the news here also. So for Yahoo Finance, that's simply what I use it for, right? And then CNBC, my only purpose for using CNBC is in the morning when I go on CNBC around 7 a.m. or 7:30 a.m., right? The first thing I see is here on the top, a nice little headline comes in the red, all right, in the top at 8:30. If something is due, let's say, for example, CPI data is due, PPI is due, or some sort of interest rate, Fed at 2 o'clock, we want the latest news. On CNBC, a headline pops up in the red right here, and you can get the latest breaking news from CNBC, right? It pops up right in the morning. And then something called 5 things to know, all right, like 5 things to know. 5 things to know, right? They have this section every morning. They come with these 5 things, the 5 most important headlines for the day. CNBC has that little pop-up here, and that sort of gives you a little idea of what are the big things happening in the market. All right. 5 things, for example, this is from January 28th. All right. 5 things to know before the stock market opens on Friday. So we had the Wall Street worst market sell-off. We had Chevron Caterpillar hitting Dow futures after earnings. Apple shares holding on to gains after strong quarterly results. Like, it's basically a short summary of the 5 most important headlines according to CNBC. And this comes up every day. And I think all of you guys should read this. It gives you the 5 most important headlines of the next morning. All right. And whatnot. So that's simply what I use CNBC for. And of course, the if you don't have live data, you can just simply type in any quote. It gives you the proper quotation for the after and pre-hours. You can simply just type the quote in, and they give you the change after hours and pre-market. It's usually pretty accurate. All right. So as you can see, Apple after hours is up 27 cents as of January 28th. All right. And then obviously they have other news, which I usually don't use, but that's up to you. All right. So that's what I use CNBC for. And then one of my favorite websites, right, is StockCharts.com. The reason being is the charts are very simple. They're very clear to see and to use. And I simply use this for, let's say if I go on a ticker, just any ticker, let's say I go on Amazon, for example, right? The only reason I use this website is basically I go, right? I simply choose my exponential moving average, right? 50 to 100. Usually when I sign in, I can use more options here, but here it won't allow me. I simply put my 8 and 21 EMAs on StockCharts.com, right? And this gives me a nice little clear view of my line is very clear, as you guys can see. Ever since Amazon's been under 8 EMA, it's been in a nice little downtrend. It bounces, touches. If it gets through, it gets rejected from a 21 EMA, and it stands underneath it. And if you want to put this to work, on Monday, tomorrow, you'll see that the 8 EMA, which is 2908, right? 2908 right here will be actually a resistance on its own, the 8 EMA, all right? And then once it gets through it, then 3081 is all the way here if it manages to hold above 8 EMA. Usually when a stock holds above the 8 EMA, it likely goes and tests the 21 EMA. And then at the 21 EMA, it depends if it's going to go through or not. And then the MACD is very clear on this website as well, right? Like if I go on the weekly Amazon here, right? It's simple. And for many months it's been consolidating, but here I can see the weekly, these things have turned. The MACD is still open to a downside. It still has to a long way before it resets. But on the weekly, if it gets to 3159, I will probably take a short just based on this chart alone. That's it, right? And so 8 and 21 EMA, they're very accurate once the stock goes into a downtrend or an uptrend. As you guys can see, back in 2020, it rode this 8 EMA on the weekly to the perfection, basically. All right. And as soon as they broke the 8 EMA to test the 21 EMA, it went into a long consolidation phase, like they stuck to it. Okay. And so that's what I simply use this for. And you can use this for the 50 EMA and the 200 EMA as well. All right. And then one of the other websites, the most important website that I use is TradingView. I usually have it open for my SPX chart, right? It gives me a lot of clarity. I use this for that. And that's it for the charting, right? You guys can all make your account here. You can get paid TradingView. TradingView basically allows you to do many things, right? It gives you all these things on the left side if you want to draw trend lines, if you want to draw channels, anything that you want to do. For example, if I want to draw a channel like a intraday channel on, let's say for example, I'll go on a different chart, Apple, for example. Right, and I'll remove my triangle, I guess, and I want to draw a channel here that maybe it holds this 5-minute range, right? Maybe I'll draw a 1-hour chart here, right, to see. I'm just giving you guys an example. If I want to draw a channel that it might go in a nice little uptrend here. So basically, I'll go here. I'll draw my channel here, right, and then you can navigate this as you want, right? From these, just learn how to use it. It's much easier once you learn. Right, and then this 1 hour, now it gives me a nice little view that it might come down to these levels, And then obviously I can extend this, that it might, trend trading, which we call it, all right? For example, if I want to put this to work on the other side and this downtrend, let's see how perfect this was. This is very useful. I find this tool very useful for some reason. And I actually send it in the chat as well sometimes, right? You guys see this, right? And then as soon as it broke out of this channel, we saw, right, it broke out, tested, and then obviously it's out of the channel, right? And this is the 1 hour channel, guys. If you guys are able to define this channels, usually to define this channel, as soon as the stock goes in a nice little spike from one in a certain lane, for example, it went into a nice spike right here, you can draw this channel, right? And then you simply take your midpoints and draw your channel right here. Like for example, here, how to draw the early trend channel. A lot of people don't know how to draw those channels. For example, Apple, if I was to draw early trend channel, right, here's how you draw it. As soon as the stock goes up, it comes back, test support, goes through it, it gives you this wide up point, all right? So you basically go, this is very helpful. You're not gonna learn this nowhere. You draw it here, and then boom, here you go. Right now, this is a 1 hour trend that we have on Apple. That's how you draw it, right? Many people will be like, man, once the trend is done, it's very easy to draw, but how do you draw it from the start? Well, this is how you draw it, all right? You want to be a little bit more accurate on the macro time frame, you simply extend this to this resistance right here, from here to here, all right? And then now you have your channel right here, and you can play in this channel. If it comes to test this trend line, there's a likely that Apple's going to bounce on that 10-15 minute, maybe half an hour, and you'll catch that 30-40 cent move if you're trading options. Make sense? So that's what this channel is for. This is just one example I'm giving you, but this has a lot of others. The Fibonacci's are really good. Elliott Wave is here. If anybody uses Elliott Wave, right? And then they have if you go on the indicators, one indicator that I'll give you guys here, if we go on the daily time frame, you don't even have to do anything, right? You simply go on indicators and you type in auto fib. Their auto fib retracements are really good, all right? You simply type in those, it gives this auto fibs, all right? I don't like this one. The setup on this is not really good because it's from the top, but usually it's very accurate when it catches the bottom, right? And then you can see the fib levels. All right, let's choose a different chart. Maybe let's see the weeklies. How is so on the weekly is much better. So this auto fib on the weekly is much better, not the daily, right? And this is very useful sometimes. And then you can see how on these levels is given to you, right? And now if we hold above this 161 retracement, the next one is all the way towards obviously these resistances. And you can this is auto fib, but if you want to put your own Fibonacci, then you can simply remove this. You can simply just remove this. You can use your own Fibonacci retracement from here. Where is it? For the weekly, it depends which point you choose. I'm just going to give you guys an example, and then you can click on this and work on your scaling points. I'm not going to go into too many details in this, right? This is something that you got to put the work in on your own, watch some sessions and see how you want to draw them, right? One thing that people confuse, do we draw fibs from bottom? Do you draw fibs to bottom to top or top to bottom? I'll let you guys figure that out. It depends on the uptrend or downtrend. All right, so go.
Ricky, I'm sorry to cut you off in the middle. Along with the fibs, I've noticed, there are some traders, they actually use Pitchfork as well. So if anybody's interested,
I can go over it, right? But personally, I don't use it. Sometimes you'll see on my technicals, I actually have it drawn. Instead of using the Pitchfork, I make my own trend lines. I prefer those. But if somebody wants to use the Pitchfork, let's try it here on the weekly. How would it work on the Apple, right? Because I don't use it on TradingView, so my drawing right now obviously won't be too precise. But here's how you could use it then. All right, so you'll take the midpoint of something, right? Now, guys, I don't use Pitchfork, but I do understand the basics behind it. That's why I'm actually able to figure out the drawing right away, right? It's basically a trend line. You the middle point, you hold it, and then you can adjust this as you go, right? If I adjust this here, you can see based on just my drawing from this level right here, the midpoint is pretty accurate on the weekly. Now, Pitchfork, I repeat again, I don't use it, but if you do want to use it, it's basically multiple horizontal or parallel trend lines to one direction, which you can use, right? And you can adjust them accordingly however you want. But here, if you want to do Pitchfork, you can, and it gives you a forecast basically like a sun ray that the stock may move in. All right. And if you want to extend this, right, I'm pretty sure one can extend this as well. And right here. So if this trend line was to break, Bucky, I think you might be using this, and then you can see where the next trend line spot may be. Am I on point on this, Bucky? That's my understanding of the Pitchfork.
I use it sometimes, bro. I mean, I actually follow your trend. Like I make my own trend lines first,
Yeah.
and sometimes just to get a confirmation, I'm trying the Pitchfork as well.
But for example, I mean, this I extended to the right. So if it falls below this mid trend line now, the next one will be here. Making sense, guys? So this, I think you can adjust to multiple things however you want to. You can even keep it here if you think the stock goes up and then the uptrends. But obviously, where to put these points is what matters. All right, these points that we have here, that's what the scaling of these points will matter. So that's something that you can do analysis on it, and it can help. Right? Personally, I just choose my own trend lines. Like for example, if I was to draw trend lines on Apple, just an example, right? The first trend line I'll choose is my basic trend line right here, right? That's my number one trend line. I basically will zoom out here and I'll show you guys what I mean. This will be my first trend line, my first forecast, and then my second forecast will be the reason from here, the recent dip I look for. And for me, the recent dip would be the last 2 years. There's a weekly chart I'm doing it on. On the daily, it'll be different. And on this will be my second trend line, right, which is the resistance trend line. And this will be my third trend line right here, right? This will be my third, usually a nice little array of 4 to 5. And then obviously we have this right here. I'll probably keep this here, roughly like this. All right, and this now gives me a little forecast going into the future that, if I'm looking at the macro view and then how this will play out. So as long as this trend line is being held, right, I will play this. And now we're near resistance here. If it gets through this resistance and holds, then this will be the next resistance, this trend line. Now that's how you would play these. But again, the drawing of these will matter how you draw them. All right. And then some people will draw a trend line from here. Like you can cut the noise also if you want. Then you can draw the next trend line here from these points. So trend lines is very, it's a little confusing. It just depends which point you choose from and how you want to draw them, right? So, and then somebody would probably pick another point from here. Now they're all right trend line. There's not a specific, answer that which trend line is right. All these trend lines are right, all of them. Okay, I can draw maybe 50 more within this range. It just depends how you look at the chart and how you draw them. And once you start practicing those, they'll make more and more sense. All right. That channel, Hassan, I'll type it here. That was a Pitchfork. There are a lot of technicals, guys. The technical, they're endless technical. If you guys just click on this indicators alone, there's so many. Like technicals alone, there's, I don't know how many there are, but how many can you really learn? Right. The question is, how many can you really learn? Right. Look at all these. There's so many. Right. How many can you really learn though? Okay, then you can even pay for them. So I think the simpler you keep it, the better it is. Because if these technicals were to work that much, then everyone would make money. But I think trend lines, I think Fibonacci's are one of the best ones, right? A huge psychology behind that. And trend lines are good. And then support, resistance, obviously the basics. And then 50 and 200 MA. And then we have the 8 and 21 EMAs as well. All right. And so TradingView, that's what I use it for, guys. Right now, we'll go to, I will go over some option scaling. One thing that I want you guys to understand, guys, let's say, for example, if you're trading a stock like, I would say, let's say MasterCard, right? We have some trades on MasterCard on last week. If you're buying an option on a stock and the option is costing, let's say $4.50, all right? The pricing of the stock option is $4.50, all right? And let's say you buy this option. This is something that you guys need to pay attention to and understand. If you buy the option at $450, so you bought this option at $450, this option you need to understand on MasterCard. If you bought one option, it's pretty simple that your account is probably a 10K account or maybe a 20K, maybe 25K, a small account. All right. This option ends up going to above $6. All right, rule of thumb. This is one thing that I learned as an options trader. Sometimes, yes, options go from 450 to 6, they'll come back to 1, then they'll go back to 20. I've seen that happening, and I do hold some positions like that when I'm really convicted. I don't look at the option pricing, then I look at the charts alone. But if I'm day trading, for example, option goes from 450 to 6, that's $150 in profits. Right, percentage wise it might not be a lot, but money wise that's $150. If this MasterCard stalls, for example, for 5 minutes or something happens, if you're holding onto this option and you're day trading, don't let this option go below $4.60. At 460, just break even, cover your commission, and call it trade, in my opinion, if you're growing your account. All right. But from 6, because options are obviously volatile, they're not going to go up in a straight line. They do go from 450 to 6 back to 450. It'll come back, test the support, and maybe it goes back to 6 and then maybe 7, 8. Yes, that happens. Sometimes you have to hold on to your winners. Don't get me wrong. But just for day trading, if you want to take quick profits and be on the winning side, for building an account, don't let those options go below 460. You're better to stop out, right? And then revisit it once it holds again, right? Maybe a different strike. And then let's say if you have 2 contracts, let's say you bought 450, you bought 2 contracts, all right? You bought 2 contracts at 450, right? And your total cost is $900, okay? And this option goes towards $6, for example. This option goes to $6. Let's say $6. No, that's fine. It goes to $6. Personally, I will sell one. Okay, I would sell 1 contract. Okay, why? Now with this 1 contract, you have decreased the price of the other option all the way towards $3. Make sense, right? You lock in the one at $6. So now your remaining principal is only $300. You have 1 contract left. That is also trading at 6. If the contract continues going up, great. But if this contract, right, now the second contract, let's say the second contract comes back to 450, I would simply just sell at 450, right? Overall, you nail a winning trade. Overall, so you bought 2 contracts at 450, they go to $6. All right. You would sorry, I spelled this wrong. I would sell 1 contract. So I would sell 1 contract and keep 1. The second contract, let's say the stock starts moving down, it wants to come back and test the support. We don't care if it goes back up after or not. Don't let it go below 450. Sell the second at 450, right? You lock in your profits. At least you're up on the overall trade. At least from $900, you're up at 1,050. All right. And if the contract continues going up, then you can hold it now, right? You have all the way up to $3 for this contract to go. Something happens, the market gaps down tomorrow, anything, and you get out of the trade break even, right? And if you have 4 contracts, for example, if you have 5 contracts, maybe if you have 5 contracts, for example, right? Let's say you buy, like, this is all these numbers all managing. Personally, I'm also getting better and better as the days go by, no matter how much experience I have. That's something that I was thinking this weekend. Right, because one of the trades I had, I bought them at 450. That trade went to $7, and I did not sell. Right, and this is my personal experience. I did not sell, even though I know a lot about managing. I know my numbers. I did not sell. At the end of the day, that trade was trading at $2.90, $2.87. I'm like, damn, man, my trade actually, it was such a great winning trade. In which I was full side, it came down in a loss, and I did not feel good about it, right? So I was just thinking that why didn't I follow my own rule? But let's say, for example, for 450, if you bought, let's say, for example, 5 contracts, let's say it goes to $7. Just an example, it goes to $7. Maybe if you're still convicted, sell 2 or 3, lock in profits, right? And now the other 2 contracts, you can hold them until break even. Hold the other until break even, right? And then if the stock comes down, no emotion, nothing involved, just sell them at 450. At least overall your trade is in now profits, right? That's something that I just want to go over on the options scaling out. If you have options that you buy at $1, for example, if you're buying $1 option, now these are the options that that trade about $3, $4. If you buy them in multiple, don't look for 100% on those, because the bigger the contract price, the faster you want to take the profit. Yes, I understand sometimes we have contracts that go from 10 to 100. It happens, but don't force profits. Don't hold them out of your ego that no, I don't like. If a contract goes from 10 to 14, yo, bro, that's $400 per contract profit. Don't look at it as 40%, right? $400 is a lot of money. Now, a person whose contract, who only has $1 one contract, goes to $1.40 for him. Yes, he can take a little bit more risk because maybe he wants to make a little bit more because he only has $100 put in, right? So maybe he wants $50 or $60 profit on it. But if you bought a contract for $10, which is $1,000, it goes to 14. Have a stop loss, because contracts from 10 to 14 move really fast. Right, many of you guys buy Amazon, Google, out of ego because you want to hit those big trades, even though your account is not tradable for those. And we tell you guys, please don't trade bigger contracts if your account cannot afford to, but yet you end up doing it. It's human emotions. Personally, I admit that I also sometimes have trouble following what I sometimes teach, and it's okay. I'm a human being at the end of the day, but just have to get more and more disciplined as you become a more professional trader. right? And so that's one thing I just want to say. If you have a bigger contract, right? For example, T called out Amazon at the 29.30s at $8.30. They went to 14 within 5 minutes, right? And he, T, what happened with that trade? You sold them for top three. So from 8:30 to 14, T's with me, guys, if you guys have any questions. From 8:30, they went to 14 on the Amazon trade, right? But these same contract, he got out with his profits. He sold them fast because why? I mean, something that have moved so fast, why hold them, right? As could be as a squeeze candle. He got out with profit, but these same contract later went to like $2, right? So imagine if somebody held. But then at the end of the day, these same contracts went to like $40. But do you really want to hold through this turbulence unless your account is like a 6-figure account plus, and then you can manage that trade? That's a different story altogether. All right. But bigger the contract, and if you're on the right side, they will go up $2, $3, $4 fast. Yash is really good with this. I think he's one of the best guys I've seen when he enters contracts at 14, 15 bucks. If the trade goes against him, he's out right away with a 50-cent loss. But when he makes profits, he takes it $2, $3 really fast. And that's the reason he's able to grow his accounts so fast. All right. Rashad, he has any good advice amount of options to take when calls are made in the chat? 10K account. Okay. So if you have a 10K account, and number one rule, first rule is this, the first thing that you need to ask, is this only an options trading account? That's number one, Rashad. If you're trading options, all right. Is this an only options trading account? If yes, then you want to keep this account as much cash as you can. All right. So from 10K, I will probably start with 2% positions. All right. Meaning from 10K, if I'm playing options, I'll start with $200 per position. One or two positions maximum. Now, obviously, these will vary as per your risk tolerance. 1 or 2 positions maximum. These are, I'm just sharing what personally I would do. All right. So a total of $400 at a time. Now I still have $9,600 left in cash. If these go to zero, let's say, for example, you're a picky trader, you take your time to trade options. Let's say, for example, you're very disciplined. You only want to do A+ setups. Let's say these 2 trades go to zero. All right. Let's not forget about winning. Let's say both options go to zero. Well, you know what, man? You can still go to sleep. Why? Because you have $9,600 cash remaining. And if you're a good trader, if you're a fundamental trader, if you're not fundamental, if you're a disciplined trader, you're likely going to be on the winning side moving forward. Now, let's say from this 9,600, right? From this 9,600 on your next trade, you do another $200. Your position size is consistent. Guys, this is the most important thing. Your $200 consistent position sizing is the biggest secret in options trading. Consistent position sizing. All right. Most traders actually make money on trading. The only reason they lose is because they end up differentiating their position sizing. In one play, you might buy 2 contracts, and the other you buy 10. The 10 goes losing, the 2 you make money sometimes. But anyways, now there's $200. Let's say you hit a 200% trade, right? For example, now you're back to $600 on this. Your account is back at 10K. Now let's say you're a disciplined, picky trader, and your win percentage is 51%. Well, what does that mean? Overall, you will be in profit, and the account will grow as long as you keep the position sizing consistent. This is the most hardest part in trading in options. All right. And if you're only doing A+ setups, right, you're patient with your trades, your winning percentage will likely be somewhere between 60 to 70%, right? As long as you're doing the A+7 setups. What does that mean? Well, your account, your account will grow, whatever that may grow by. Now, let's say you take this 10K account to 12K. What happens to your position sizing then? Are you gonna go out of all control and be like, I'm up 2K, I want to put $1,000 in. I don't want to make $200 no more. Well, I can tell you one thing: you're likely going to give up the gains that you made also. All right, you're likely going to give up the gains that you made in the last trade, and this 2K will go up fast. So what you want to do here is from $200, you only want to increase the size to $250, right? At $250, you divide it by $2,000. This gives you 8 great trades. All right, at $250. Now, obviously, these numbers will vary. Maybe you want to do 4 trades at $500, or per one contract, whatever it may be, right? But these 8 great trades with profits, and then once your account maybe gets to 15K, you can now increase your size to $300 per trade. The secret here is compounding, right? Now your gains start compounding. And if you understand the law of compounding, you understand what I mean by this. You start with $200, you stick to $200, and then when the account starts growing slowly, let's say the first two positions go to zero, you don't make money. But you know what? Because you're doing great trade, you're a disciplined trader, you don't have no FOMO, you're only doing the trades that you should be doing. And eventually you will hit the winning trades that will take your account above the 10K. All right. But if you don't keep your position sizing consistent, and if you're going out of the row and you're forcing trades, or you have some sort of pressure, maybe you have some payments to make, and you came to options world, your friend told you you'll make this much money, I made this much money, without knowing what that person did, all of a sudden you're going in big, you're taking size, you're likely to lose that money that you have. All right. So in options trading, you have to be very careful. You have to be very disciplined. All right. So Rashad, I hope that answers your question. Right. And then we have Bitcoin. I want to go over some Bitcoin leverage trading, guys. Some of you guys who are doing leverage trading on crypto, this is on request, right? By the way, this channel is very good. Right here, this is a weekly channel on Bitcoin, and this is the weekly channel we are on Bitcoin, by the way. And if we break through this, yeah, this channel works great. And if you can just go on this, you'll get a hang of it once you start using it. All right. Anyways. Leverage trading, I'm just going to do a very quick session. Those of you that even trade leverage, you don't understand how the percentages work. I'm going to give something out to you guys here. All right. How does leverage trading work? If you're using 5x leverage, do you know what percentage do you get liquidated? Can somebody type in if you know percentage for liquidation? Do you know what percent BTC has to move up or down in order for you to get liquidated? Anyone? No one? Nobody? No one? And Karthik, yes, I'll go over your question as well. How to manage options that go from red time when you buy? Okay, it's very simple. You simply take 100 always, 100 divided by amount of leverage that you're using. So here will be 100 divided by 5, which equals 20. All right. So Bitcoin, as soon as it makes a 20% move to one side, up or down, if it goes 5%, if it goes 20% up, your money will double. If it goes 20% down, you get liquidated unless you put an extra margin on the side on this. Only then you will not get liquidated. All right. Why do people make fast 100% in the options sometimes? Sometimes people go 50x, right? Let's say, for example, if I go on Matic USDT, right, and these are another example of some trend lines that I drew, right? On Matic, if you guys, right, it's already drawn from before, but right. And so let's say, for example, if you're trading Matic, right, it's trading at $1.57, and you want to treat this like option, you want to go in with 50x leverage, you want to make money, all of a sudden one of your friends made a lot of money. On Matic is right now trading at $1.58, for example, all right, and you end up using 50x leverage, you know, because you're pumped up that you're going to make some money here for sure. The 5-minute candles are looking great. You're going to, you know, do it. Now this 50x, 100 divided by 50, which equals 2% liquidation price, right? So Matic, if it makes a 2% move from here, from on 158, which is only what, like 3 cents, I guess, right? 3 or 3.5 cents. As long as Matic moves above 3 or 3, whatever 2% of 158, so about 3 cents. If Matic goes from 158 right now to 161, you will double your money. But if Matic goes to 154, you will lose all the money that you put in at 50x. All right. If you went in with 25x leverage, right? So 100 divided by 25. I know a lot of you guys did not know about this. It's basic math, but a lot of you guys did not know about this. And now we're at 4% liquidation price, right? You go in with the, I usually use 5 or 15x, 5, 10 or 15x, depending on my conviction, right? 5, I love the best. And if you use 10x leverage, right, then you're using, then you have 10% liquidation price, right? So that's how exactly leverage works. Does it make sense, guys? Is it easy for you? Can somebody type and say yes? Right? And this leverage trading, you can make a lot of money in it if you understand, if you work out the technicals and you actually pay attention to the 5-minute charts. All right. And so I hope that was that. And any questions I can answer, Karthik, for your, how do I, so some options, Karthik, number one, in order for me to manage those options is position sizing that matters. position sizing. Do you buy options because you expect zero, right? If you expect zero from every option trade that you do, like for example, that 10K account 10K account example I gave, right? That $200 position, expect zero on options, right? So you can at least um, make the play, because this $200 option may go to $100 first and then eventually go to $500. But now this 10K account, if you're using $1,000, which is 10% of your account, and if this comes down to 500, now you're gonna start worrying, well, what should I do, right? And you're not gonna like it, you won't be happy, your emotions will get involved, and you might even end up getting stopped out of a great trade, right? You might stop here for a loss, or you take the $500 loss, and now you're sitting at $9,500 so fast. You already gave up 5% of your account. There was no need to play $1,000 in options with a 10K account at the first place. You want to go in with 200 maximum, right? Maybe 100 or 100 to 200, right? Whatever it may be, right? Or maybe 5 contracts of 40 cents. And there are a lot of stocks that you can play this, right? At 40 cents, 5 or 4 contracts. And these contracts will eventually hit 60, maybe 0.80, and even $2, right? They move a lot, right? And then you can manage those. And if these percent go to zero, well, that's fine, because I'm not saying guys trade expecting zero. No, don't get me wrong, I'm not giving any advice here, but that's just how I trade, just something I'm giving an example, right? So on a small account, trade small, that's the only best way to survive in the options world, right? And if you're scalping, let's say if you have a 10K account, you're scalping with $500, you have that risk tolerance. Now you want to scalp, you buy 1 contract maybe at 5, or you buy 2 contracts at 250. Well, I keep my stop loss at $2.30, and you want to play stocks that are liquid in option pricing. All right, you don't want to be playing stocks like if a stock has a spread 210x 260, you need to avoid playing that option. Do not play this. All right, you want to play stocks that has liquidity like 2.41x 2.43 consistently, right? 1 or 2 cents spread max. That's it. 1 or 2 cents spread max, right? If an option has this 50-cent wide spread, don't play it on a small account, right? Because even if the stock goes up, you might not be able to get fills higher than these thing. All right. So the option pricing, know what you're playing. All right. This is very important. Some of you guys play these wide spreads on small accounts, and then you don't get your fills, right? So play options that only have 1 or 2 cents spread max. That's it. Anything higher, avoid it for a small account. That's another mistake that is usually made in many. Eli, I'm not sure what you want me to cover. Can you type? Maybe I can cover it. Can you talk about stops right when you buy, overnight hold when you okay. So I kind of I kind of went over it in a different way, but I'll answer your question. Number 1, stops. So stop loss, again, is this on an options you're asking, Eli, or is this equity trading? If on equity, then you need to know where the support is. If on equity, for example, right, the ratio has to be in your favor. Okay, so options, I won't cover equity, I'll just go over options fast. Now, stop loss on options, it really depends. If you're trading with a 10K account, for example, right, and you buy an option which is, let's say for example, $5, you buy 1 contract at $500. And Eli, I'm going to put this recorded session up so you can watch it later, right? Because I did cover kind of what you're trying to ask me, right? So this option is now costing $500 per contract. Number 1, you should not be playing with this option on a 10K account, because that's 5% of your account, right? I'm just giving an example here. You can work the math on your account, however, whichever account you have. Here, if you're scalping with a 5, but you still decide that no, you want to scalp, you have something, you buy a contract at $10, for example, which is $1,000. Now you decide to trade Amazon, right, for some reason. If that contract goes to $8, just no emotions need to be involved, nothing, just stop out, take that $200 loss. It's simple, it does not go in your favor. But trading Amazon or Google, you have to understand if the VIX is coming down, even if the stock holds, these contracts sometimes lose value. So there's a lot of understanding in depth on options accounts when playing, right? But so the best thing, Eli, is the position sizing, right? Your position sizing has to be correct, right? If your position sizing is right, then you're not worried about your stop loss, because sometimes we buy a contract. Now, for example, I'm just going to go over pins, for example. All right, one example that I'll give, let me go on the daily chart. Now this options, is a great play. Pins, people on Jan 21, right, at the closing price, so January 21 pins was it closed at 29.45. Here's an example I'll give you guys. So it closed at 29.45, right? I bought some contracts at roughly $2.60. I believe I forgot my pricing, but I'll just go over as an example. Further out, I bought them for $2.60. Now, next day on on January 24th, over the weekend, on Jan 24th, right, over the weekend, there was a gap down. All right. Now my options obviously lose value on gap down, right? Because it came down. And then in the morning they flushed. So my stop loss was hit at around 220, around 215. I stopped out. I gave up my trade. I stopped out. But then these same contracts, like because my size was bigger, I did not care about the technicals. I did not care if it was going to come back or not. I simply got stopped out. I took my loss. I moved on. But these same contracts then went to $3.50 plus on this big rip up, right? The same contract went to 350 here. So if I go on the 5-minute chart on January 24th, right? On January 24th, if I go, right? So right here, roughly here. So this is a 5-minute chart on January 24th. I bought the contracts here. I'm just going to zoom in so you guys can see, right? So you guys can see this. So pins I had here, a gap down, right? And I stopped out near these prices. But later on in the day, this thing absolutely flew. My plan here was different, Eli, from the start. Because I was in with a bigger size, I did not care what was going to happen after, because the stock rate kept flushing. I did not know this rip was going to come and this position was going to go in massive profits. I simply stopped out because I was in a bigger size. Now, let's say if I was in with a smaller size, and, I was looking at the overall action that, no, the stock is going to see higher maybe, right? I was looking at the overall market, there will be a bounce and I see much higher price coming that will eventually take my option up. Then I would have maybe held if my position size was bigger, right? So sometimes on options, if your position size is bigger, your emotions will get involved and you will stop out because there's a big amount involved in it and you don't want to lose it, right? And that's exactly what happened with me here in pins. So the answer to your question is a little complicated. There's more than one answer. It simply depends how much money you're putting in. If you're going in with small sizes in options, it allows you to hold through turbulence and play the bigger picture move. That what support will be held here, pins may test 30, 31, whatever it may be, and then you'll take your profits. But because my position size was bigger, I got stopped out here right at the bottom, right? So that's one thing. And when you're in profits on options, I did go over this. So please do watch the recorded version. There is something that I spoke about on the options profit taking. Anything else that you guys want me to answer, guys? Anything? If you find anything useful, so there are a few different things I tried covering. It was a very basic, simple session, but I hope that I was able to help with something with all of you guys. Anything else I can answer your questions? Some of you guys were asking certain things in Discord, but I also forget sometimes. So please do remind me here. I can go over them now. That's it. Well, good to see you, Rohit, Lenny, many of you guys, Robert, right? And thank you for attending, guys. I can't hear you. Are you saying something?
Yeah, I have a quick question.
Yeah, go for it.
I've been practicing on the 1 minute just to see, like, if I see when I want to jump in, it backtrack a little bit, and that's when I jump into the same call I want. Can you give any tips on when to enter? Like, I have the contract, I have the price. I'm just trying to find the right. I guess I'm being picky on my price, but are there any tips you can give on entering?
Yes, on the 1 minute chart, my number one tip: nothing trades better than these 4 names on the 1 minute chart: SPY, Qs, IWM, and Apple. Right? T uses a 1 minute chart on SPY, right? A lot, right? He's very experienced with it. So the reason being is the options are really liquid on these. If you're using 1 minute charts here, they can work, and they're usually the volume is really high in these names. All right, and so if I go on SPY, for example, right? Man, I don't want to remove these. No, I don't want to remove these from this. If I go over the 1 minute chart, I don't like the TradingView 1 minute chart. I use QuestTrade. It's actually more up to date. Right, on the 1 minute, if I'm trading, Andrew, if you're listening now, right? That obviously the patterns are the same. Simply, one thing that you can look on the 1 minute is if the price is being held. If the price is being held, then you want to, here, right in front of my eyes, I have this. You have to obviously differentiate, resistance and support. Here we can see on the 1 minute, there's a lot of resistance here, right? As you can see, there's a lot of resistance in this area. As soon as you start seeing this kind of poke above, it's probably going to get rejected at first, obviously, at this resistance. First, we had resistance within resistance, which is right here. This zone right here, right? As you can see, it was getting rejected. It came back and tested support as it was going up, right? As it was going up, you want to see the volume build up a little bit more. Here, the volume started building up more on the 1 minute, as you can see, right? And then obviously it started holding up here more, and that's when you see more strength. And that's, you see the volume that came on the 1 minute right here. Then you start seeing more strength, more volume picking up, and then you can probably play a call side based on the 1 minute chart, right? I personally don't use 1 minute chart, right? I know a lot of people do, and the same thing on the downside also, right? As it was holding, there was a little bit more build up in the volume, and then you can see it going lower, right? And for 1 minute, you have to be very strict with it. If you're using the 1 minute chart, then you better act based on the minutes, right? So if I'm using 1 minute chart, the next minute, if the trade is not out, you're going to be out the next minute. On the 5 minute chart, you can hold the trade for five minutes longer. On the 10 minute, 10 minutes longer. On a 1 hour, you can hold the trade for 1 hour longer because you're letting the 1 hour price action play out. On the 4 hour, you can let the trade hold for 4 hours, right? One of the very good indicators that I know T uses this as well, is the 4 hour chart, right? If let's say, for example, if I go on Twitter, just an example, I have no idea what the Twitter 4 hour chart is. 4 hour is very good for confirmations. It's very good for confirmation. Like here, for example, a nice, very clear bear flag right here on 4 hour, right? That you can use. It also gave a reversal also, but then this 4 hour selling volume right here was not good. And then this selling volume was a clear indication of a bear flag breakdown, and boom, it goes. And here on the bear flag is kind of, trying to hold. Well, the entire market looks the same here. We had the relief rally. And I'll tell you guys why we had the rally on Friday. I will tell you guys why we had the rally on Friday. Something if you're attending here. All right. Here on the 4 hour, we can see a nice little bullish pattern. Now I want to see if the market holds above here on the next 4 hours, and then potentially maybe play to the upside. All right. So 4 hours, they're very good for reversal signals, right? They're very good on 4 hours. And on the 4 hour, if you see a candle like this, is usually accurate and it points towards more downside. If you see this candle, all right, on the 4 hour, it's usually very accurate, right? But here it wasn't at the same time. Can't always rely, but this candle right here, if you're seeing them, they're following each other one after the other. It usually gives you a nice indication that there's some weakness here and might get sold off, right? So sometimes, yes, you do have to follow up. So on the 1 minute, if you're using a 1 minute chart, my first recommendation, if you're listening, is these 4 names on 1 minute: SPY, Q, IWM, or Apple. Not any other fifth name that I would trade on a 1 minute chart except these 4. Why? Because the options are very liquid. You can actually enter these options in the 1 minute, and then within 2 minutes, you can exit with massive profits. All right, that's the reason. And that, and on to more. Not your iPhone messaged me. Read volume and options trading. This I will have to log in onto my platform. Yes, I use a lot of volume in options trading. In fact, I enter positions based on options volume most of the times, or else I don't enter, right? But that I will have to log into my platform. Just like you guys can see the volume here, there's options volume, which I see. And based on that, I usually make my decisions. Yes, I will go over that, but you got to message me in premium. I will open up my platform and I will show it to you live and how to do that. Current best indicators to use on TradingView. Personally, I just stick to the 50 and 200 MA, but like I said, Fibonacci's are really good. They're on this left hand. I just keep it simple. This Fibonacci retracement is really good, right? And then I use the trend line a lot, right? If I go on the daily chart of Twitter, for example, right? Just an example, if I should draw trend lines here, right? These trend lines are likely to hold. I love drawing trend lines here. They're very simple. They're very easy, right? And you can draw them however you want. There are many ways that you can draw them here. I'm just giving you guys some examples right now, right? This wedge that broke out, for example, if you were playing with this trend line right here, you could have caught this move back in the days. And then here's the one trend line, which is likely to get rejected on Twitter. And then we got one more right here, right? It depends how you draw trend lines, guys. You can draw them from any point. However, it's just it all depends. All right. But trend lines I use a lot on TradingView. I use a lot. This one rectangle, which I use a lot. Right. For example, if I was to point this here, let's see how accurate is this. Right. Or maybe I can extend this a little bit to this point right here. Extend it here, and this is pretty accurate. I think. Hold on, let me zoom. Let me fix this. This is the one I use the most on TradingView, guys. The range, this range right here. This is the one I use the most. But so this was the first range, right? I broke below it. So on this range, and then the more you watch it, the more you get used to it. So here you can see that we were holding this entire rectangle, this channel. It kept bouncing off, right? It kept bouncing off, but then we broke below it. And once we broke below it, now this line right here became resistant. We started getting rejected off it. And now we have been getting rejected. Now to draw this again, now to draw another channel here will be something like this. Right now another channel has formed here. Sorry. So here's how I would draw this right here. Draw here, and then, right, this is a new channel that has formed now. So I'll just delete this. So let me delete all this now. Let me just draw a new one for you guys that has formed. Right, you would go roughly from here, this range right here. Hold on. There we go. So something. Hold on, I'll fix it for you guys. And you just have to get used to it sometimes, drawing them. There we go. Why is this drawing? There we go. So something like this, and then you can always fix them from the y-axis as long as it hits the resistance points. Okay, you guys get the point, right? My mouse is not working here, right? There we go. It's a little steep, but I hope you guys get the point though, right? So as long as, so here's how you guys can draw these channels. This is one of my favorite ones to trade if you want to play a trend. Right? It's actually very accurate. I send them in the chat also. So you simply go on the left in the legend, you go on this fourth one and click the rotated rectangle. But drawing this, you just have to get used to it or drawing, right? And then you can see the patterns, right? One of the other channels that I love using is, so if I go on the Twitter monthly, but this one already filled. This pattern actually, you know what, here, GLD. So gold, if I go on gold, okay, it's already drawn here. Look, so this in the thing that I draw right here, cup and handle, right? You can basically go here on the side. You can use the art, right, to draw this, and then a cup and handle pattern, obviously, and then you can see that is the gold is trying to break out. The only thing here is there's a lot of weakness on gold above 160, 177. As soon as we hold above this level right here, as soon as gold holds above this zone right here, right? As soon as this level is held, this stock of gold is probably going to break out from highs, all-time highs. Right now, obviously, we're getting rejected here. I'm back at the 2011 highs when there was a peak, and once we're through here, we can definitely go see a lot, right? And so yeah. And guys, well, these indicators, Karam, just I basically use 50 and 200 MA. A lot of other indicators, if you just click here on the indicators, there are many that we use. Just attend pre and post market. That's where we usually go over everything, right? We use our best whatever we can. And if you missed the first part of this session, we're going to upload the video and you guys can watch it. All right. I did not take any chart requests tonight, but you can mention them in Discord maybe, or tomorrow for pre-market, and we can go over them. Guys, thank you so much for attending. I've actually been studying for the 2 days. I've been on my laptop straight for, I think, the last 2-3 weeks. I'm really tired. I need some rest. I wish you guys all the best. See you guys back in premium, and anything else, we'll go over it. Just more on investments, Andrew. Just more and more on investments. Just trying to increase my knowledge as much as I can. Thank you guys for attending. We'll see you guys.
Thank you, Ricky.
You're welcome.
Thank you, Ricky.
Thank you, Ricky.
Yep.